Next speaker is Ryan Lundquist. I was first introduced to Ryan by a mutual friend of ours in 2010. When I started a blog, his blog was already going. And his is one of the top in the country. Even though he's an appraiser, we try not to hold that against him. And I love how consistent and how accurate his information has been. As I've done research over the years, I always bounce stuff off Ryan because his numbers look like mine, so he must be a highly intelligent guy. Introducing Ryan Lundquist.
Hello, hello. Oh, yes. I need my hands to be able to speak, so can you guys hear me with this? Okay, fantastic. I am so glad for that. So, does anyone remember these right here? Fidget spinners? Yeah? Or am I talking to people who didn't see this craze happen in the market? So, I have two kids, they're teenagers now. A couple years ago, though, this was all the rage. And so 2 years ago, they were spending all their allowance on fidget spinners on Amazon. They were trading them with friends, and this was the conversation point. And it was interesting because this market, what did this market do? It totally collapsed, didn't it? And so we were at Denio's in Roseville buying fidget spinners, and they were $5 each for the entry-level spinner. And it was interesting because 2 weeks later, they were $2. So there was this massive market correction, this 60% reduction in price in just 2 weeks. My 11-year-old son at the time noticed what was going on in the market. And so the day before the last day of school, he told his friends and said, "Hey guys, tomorrow I'm going to sell all my fidget spinners." And so what he did, he went to school and he offloaded all of his spinner inventory and came home with $37. So I thought he was pretty genius. And so I keep asking him, what's the real estate market going to do then? But he's too tied up in Fortnite right now to pay attention to that. But what I want to do today is talk about the market change. Because really, I'm not saying we're going to have a collapse, that we're going to do this, what the fidget spinner market did. But the market has been noticeably different these past 6 months. And I want to unpack that. I hope that you leave here and that this was worth the price of admission, okay? Which hopefully you didn't pay for. So, but there's two things I want you to get out of this talk. Number one, understand more fully what the market is doing. And number two, to pick up some ideas for what to watch in coming time. Okay, what are the things that we can really look for to understand what is the market doing exactly, right? So have you guys noticed some sensational headlines when it comes to residential real estate though? Okay, this was last week, and I swear there's new ones every day, but the unusually large drop in home sales has real estate agents baffled. Right? I'm sure agents love that. Like, oh, thank you for speaking for us. Or here's another one, the housing blues won't be over soon. Right? I've seen other ones, the market in Southern California is beginning to crash. The rental market's doing this. Watch out, commercial real estate. There's so many things. Here's a more neutral one. Fannie Mae, the housing market will stabilize in 2019. Maybe another way of just saying that, okay, we're just going to go sideways. And so I find that it's really either two perspectives. So there's doom and gloom or rose-colored glasses. Where on one side, it seems like the side that gets the most media attention is that the market is falling apart. This is bubble 2.0. Get ready because, the glut of the market is here and we are going to crash and burn, right? And then there's the other perspective, usually from someone who's selling something, that will say, hey man, it is all good. It's always a good time to buy, okay? Trust me. Just buy now with FHA, then refi into conventional in 2 years, you will be good. Get rid of that PMI. Uh-oh. So let's look at things. Some market trends. So first of all, the region last year saw some pretty, I would say, pretty sexy stats. Overall, 6 to 7% price increases. No matter how you look at it, whether it's the average sales price, price per square foot, or the median price, the stats were up 6 to 7%. And when I talk to realtors, I think sometimes someone gets surprised, go, wow. And sometimes the public does too, because we think, I've heard the market has been so dull, and I'm surprised that these stats are so glowing. Okay? But think about it this way. 2 years ago, I used to weigh 40 pounds more. And I went on a diet. Amazing what happens when you stop eating, like you're 24, Can't do that anymore. And so I lost 40 pounds, but technically this fall, I kind of ate like I was 24 again, and I gained 10 pounds. You know, did anyone gain weight during the fall? Yes, amen, right? So some of you are honest. Okay, if I'm honest, I gained 12 or 13 pounds. And so technically, I could look from 2 years ago and say, you know, I am down 27 to 28 pounds. That's a true statement. But you know what the real trend is? The real trend is that I am up 12 to 13 pounds, right? So I can hide what's going on in my life by saying, I am down 28 pounds, but the real issue is, I need to stop eating freaking carbs. You know what I'm saying? Same thing with real estate stats. We look at the whole entire year, we go, this is amazing. But sometimes what we need to do to see the market, we have to look at what's going on right now, these past 6 months in particular. So that's what we're going to unpack exactly. So we have kind of, if you've seen this movie, anyone know? Napoleon Dynamite. Uncle Rico was a character who was stuck in the past. Everything was about 1982, right? Back in 82, I could throw a football over a mountain. I mean, all this stuff. And I think in some senses, sellers have been like this in today's market, where they're thinking that the market is a lot more aggressive than it was. A seller might look at that stat and go, wow, 7% price increases. This is amazing. I'm going to price really, really high, right? But then the market has been, it hasn't felt like that. And so sellers have been stuck back here thinking the market was just screaming up when in fact the market has really begun to change. So here's some stats. Last year there were $13 billion in residential real estate that happened. Okay, I'm sorry, I thought that was me. I thought, what is it? $13 billion in residential real estate in the Sacramento region, and that by county, okay? In the region last year, this is actually good news. Short sales and foreclosures are no longer driving the market. We have about, what percent?
1.9.
Yeah, very, very little. I always tell real estate agents, if it's on your business card still that you're a short sales specialist, that's a really crowded market to specialize in, okay? These numbers used to be drastic. In Sacramento County, the first quarter of 2009, collectively, 84% of all sales were distressed. 84 in the whole quarter. Amazing. Here's a really cool graph put out by Lundquist on Twitter. If you're not following him, he's with Freddie Mac, fantastic. Here's the homeownership rate in the United States. This is actually really good news. Okay, when the bubble burst right here, we saw the homeownership rate go down. Okay, and what we've started to see is an uptick lately. Okay, this is very positive. We don't want a market that's owned by investors. Even though if you're an investor here, that's the market you want. I think for health and real estate, we want actual people to own their homes and occupy them. And so that's actually good news. I think right here we see under 35, like millennials are buying homes. Okay? Despite the narrative sometimes it says that no, they're not, they're just texting. No, let's stop. Let's stop dissing millennials. And if you work in real estate, you're not recognizing the market, who your future buyers and your existing buyers are. So here's some positive news. Here's the $1 million market in the region. Okay? These are the number of sales. And what do you notice? Here's 2012, 13, 14, 15, 16, 17, 18. What have you noticed about the number of sales through the years? It's gone. See, you guys are real estate experts. Definitely gone up, okay? And so that's glowing news. Now, the $100,000 market, what do you notice? The exact opposite, right? And so as we're having conversations about affordability, this is just a reflection of, I think, where prices have gone, and that it's really hard to get a deal under $100,000 in Sacramento right now. Unless it's burned down, has some major, major issues. So did you guys hear about that $238 million sale in New York? Yeah, it's amazing. It's going to change our market. No, it won't. I'm just kidding. But technically, if you want to spend $238 million somewhere, you can buy that one apartment in New York, or you could literally buy a quarter of all listings in Sacramento County right now. So just a heads up if you're looking to buy. That's that. So is cash driving the market though? And I would say no. Do sellers think that cash is driving everything? Yes. Cash from where? The Bay Area, yes. Here's the actual cash stats. So this is Sacramento County. You can see it kind of peaked out in 2013. And what has cash done since then? It's gone down, and then it's really hovered around 15 to 15%. In the region, 15% of all sales were cash. Now, some investors are using conventional financing. Let's be real about that. But we have to realize that, I think, with the Uncle Rico saying, we're looking back to the past in 2013 thinking, these investment funds are going to gut our market, and this is crazy. We have to actually look at the trends that exist in today's market, though. And this is not the dominant force. Do we remember an investment fund in 2013 who was in our market? What were they called? Blackstone or Invitation Homes. Yeah. And does anyone know how many properties they purchased in Northern California? About 3,000. In a very short period of time. They were dominant. They were actually geniuses because they helped move the market. They helped create, they not only bought product, but they helped create more competition and drive up their prices. So whether people like it or not, that's what they did. And they're looking really smart, at least right now. But they own 47,000 homes in the United States. And they merged with another fund, Starwood, and they collectively own 82,000 homes in the country. So isn't that crazy? So the Wall Street really did enter Main Street in a very powerful way. So I say the homeownership rate is increasing. That's a good sign considering what funds have done in recent years. But here's the problem that I think sellers are wanting to price for the unicorn buyer. They're wanting to price for that one mythical creature from San Jose. And I know the comps are at 530, but we're just going to push it at 599. Because these buyers are going to ignore everything, right? Because they're so rich. And so it's kind of like pricing for an aggressive market that used to exist rather than pricing for the real market, right? Do we want to price for that mythical creature, or do we want to price for buyers who are actually here? Speaking of Greater Sacramento Economic Council, speaking of the Bay Area, they put out this graphic. There's about 27,000 Bay Area residents moving to Sacramento each year. The Sacramento region, 6 counties. That's a lot of people, right? But here's one thing to consider. Let me ask you this. Are all of these people buying homes? No. When a seller sees this stat, what does the seller think? Everyone is buying a home. Okay, in the 4 counties I cover with data, there's about 30,000 sales each year. Maybe 27 to 30. I mean, they are not all going Bay Area. This is, men, women, and children, right? And so, on one hand, let's recognize what's happening in our market. We have an influx from the Bay, and it's a part of our market. But I think we have to recognize, too, that they're not necessarily the new Blackstone or the new driving force that's utterly commanding values in driving the market. Does that make sense? So keep that in perspective. But the question becomes, though, can Bay Area buyers rescue us from the softening market? Because I hear that sentiment, well, our market can slow down, but good thing we have the Bay, right? Here's my response back. These past 6 months, which we're going to dive into right now, have been really, really dull. Bay Area buyers did not rescue us these past 6 months. They did not help our market did not soften. So why would we expect in 2019 that something would change? Unless migration changes dramatically. Does that make sense? So sometimes in real estate, we're banking on this unicorn situation, or, well, it'll be different, but, well, what are we seeing right now? Okay? That's the way I look at it. Here's some news. New construction has been positive in Sacramento in the region. You see, since 2012, we've seen new construction increase. It used to be way up here during 2003 to 2005. It's a good sign that we're seeing more new construction. The interesting thing, though, is that last year, sales volume took a 10% dip, though. And so, has anyone been by a builder recently? They're kind of getting a little bit more desperate. You notice they're like, hey man, we'll get you free upgrades, and we're going to sweeten the pot because the market's soft. Okay, and so we don't want to see this number go down too much more. So hopefully that's not a huge trend that will hit us in 2019, but it's kind of eye-opening. Okay, what's going on? So let's look at local trends. Here is the median price in the Sacramento region since 2013. What do you guys see? Generally gone up, right? And what do we see happening each year? Do we see that? Do you see that cyclical nature? So sometimes the narrative in real estate is that values are always going up. Well, even in a market that has increased, they don't always go up every year. So you see that in the beginning, in the fall, in the spring you see values go up, they level off, and then they soften in the fall. Up, level off, soften. Like clockwork. So right now, we saw the market soften. Is that normal to see the market soften in the fall? Yes, so that's very normal, and we'll get to maybe some stuff that looks not normal. Now here's the market in Sacramento County since the bubble burst in 2005. What do you think of immediately when you look at that? We're like, round two, we're gonna go. Yeah, so sometimes when we're looking at stats, we immediately think, well, we're getting closer and it looks like the market's gonna pop. But I just wanna say time out because there's no bubble formula. There's no recipe that says if we get back to 395, that our market will correct. Okay? Each market is distinct. Do you remember 2005? Sometimes we were like, we want to get back to those high prices. That was a market that was built on fraud. It was built rampant speculation. I'm not sure we want to get back there. It's kind of like people like Uncle Rico who were like, I want to get back to high school, but do you remember what high school was like or junior high? It was tough, man. At least for me, I got beat up. No, I'm just kidding. I'm just kidding. This is on video. I'm just kidding. So here's some metrics, and I tell you what, I don't want to get bogged down in this, but generally speaking, price metrics are about 5 or 10% of where they were at the peak. If you want this presentation later, you can email me. I'll email that to you. You can check that out and do that. Days on market. Right now, you just know that it's taken about a week longer to sell in the Sacramento region compared to the same time last year. So what does that tell us about the market? It's softer. It's slowed down. Sometimes when I'm talking with real estate agents and they're talking with sellers, it's not good enough just to say, hey, the market's slower. I would say use some data and say it actually literally took 1 week longer to sell this year compared to last year at the same time. But we can look at 10 years ago, it was taking 90 to 100 days to sell. Right now, it's more like 45 or so. So here's an interesting stat. The number of multiple offers. And what do you notice between last year in Sacramento County or the region and this year? What do we notice happening with the number of multiple offers? It's gone down. When you look at it from a percentage standpoint, it's about 20% lower in today's market compared to last year. Okay, so that just tells us that it's a different dynamic today. And so when we hear that the market is softer or buyers are starting to get more control, we see that in the stats, right? And so very, very powerful to communicate, especially to sellers who want to price like it's 2013. Here's inventory, and then we're going to go really big on sales volume. What do you notice happening with monthly inventory since 2012? Way down. Blackstone days, we had about a 1 month supply. Kind of went up, and then it's been down for a couple years, but then up lately. So here's our lately, and then compared to the last few years, we're like, wow, the market felt really soft this year. Well, of course it did. We had more homes for sale, and some other factors. Okay, but we have to remember that in 2014 and 15, we also had this about the same level of inventory. It's been a while since we had a really dull vibe in the market, and I think we experienced that. We got a dose of it this year, and I think sometimes we're so focused on just the last year that we're maybe missing, the market. The market sort of, there's some insight there anyway from previous years. Here is a monthly supply in Sacramento County. At the height of the real estate market imploding, we had 14 months of homes for sale. Isn't that crazy? Wow. I don't want to get back to there. But if you're an investor, you're like, I do want to get back to there. What do we notice about sales volume, though? Cyclical, okay? So it's like an EKG, right? But you see that volume up during the beginning of the year, and then it sort of levels off, and then it goes down during the fall. And so is it normal to see volume go down right now during the fall? And then would we expect for it to go up? That's sort of the normal market cycle, okay? Now let me show you some stuff. I think this is where maybe some eyebrows will go up. I know there's a lot of numbers on this screen, but please pay attention because this is really important in understanding the market. Here's a good way to look at sales volume in Sacramento County. And we see December sales. And what do you notice happening, particularly this last year in December? It was way down by 25%. Now, some of that, do you remember what November was like in Sacramento? We had something going on in the air. What was that? The campfire. So maybe there were less pendings in November, like the less sales in December, but I don't want to blame dismal volume on the campfire. I don't think it's the campfire's fault. we've kind of had a slump that's going on, which I'll get to, but that could be a little bit why it's lower. Did you know that it's our worst December since 2007, actually? There have actually only been 2 worse Decembers in the past 20 years, and they were in 2006 and 2007. So sometimes when we're looking at stats, we're going, wow, the market wasn't crashing then, and what's going on with volume? Okay? Past 12 months, even sales volume is down 3.5%. Remember what I shared, like my weight loss thing, like we can hide the real trend if we look at the big picture. The big picture looks okay, it's like, okay, it's down 3.5%. But if we start to see in the immediate time where, wow, stats are sagging, that's really, really important to watch. That's where the trend is at. A similar thing in the region, down 23% in December, and down about 5% for the whole year. Now, when we look, here's a different way to look at sales volume, and if I email you, I can show you that later, but here's the percentage of changes. Like in January, volume was up 3% compared to the last year. But you can see here's down. Over the last 7 months, we've seen volume down compared to the previous year. So it just tells us that something has started to happen in the market where we're seeing a softer market this year compared to the previous year. And so sometimes the real estate community gets frustrated with local media thinking, you know, you guys are just honing in on negative news, but it's like, well, no, these are actual facts, you know? Here's what the region looked like. And here's what the market looked like in 2005 when it imploded. Okay? We had regular declines by 20 to 30% all day long for a long period of time. Properties stopped selling. Okay? Now, we haven't seen this dynamic today. Not that there's a bubble recipe, not that it would have to look this way, but right now, we had a really sensational month this last month. If that continues over time, then we're like, whoa, time out. The market has begun to change more significantly. Okay, so here's the truth of it, and I know if you work in residential real estate, you're getting stressed, you're thinking, oh my gosh. But volume is down 11% over these past 2 quarters, okay? And I know it's stressful at times to share, and so if you need a way to soften the way that you share stats, if it feels good, I'd say just share a picture of a dog when you're looking at dismal stats, okay? So, okay, I'm glad you guys laughed. But watch, go with me, doesn't this just feel better? Sales volume was the worst since 2007, right? And you're like, oh, it's like, that's not that big of a deal. Or there's an element of uncertainty in the market. There actually is. So the question becomes, it was a really dull fall, is it more though? And I would say yes, it is. There's something happening in the market. I'm not talking about a collapse though. And let's look at price momentum, the bubble, and then final thoughts. So we have had a slow season, and what's happening is that the market has been slowing down price-wise. Again, there's a lot of numbers here, but check this out. Here's December sales, and here's the rate of change through each year. What do you notice about the rate of change? Is it a lot lower today compared to, like, Uncle Rico's like, we're going to price like it's 2013 when the market went up 20%. And you're like, well, but we're not in that market anymore. So when that owner calls me and says, hey, I want to remove my PMI, I just bought a house in 2017, and I just need it to appraise for $50,000 more. And first I'm like, dude, why did you say that? Don't hire me, I can't promise you value. But secondly, that owner's disconnected from the reality that we don't have a rapidly appreciating market anymore like we used to. So do you see that in the stats? Here's the past 90 days, because we don't want to just look at 1 month. What do you notice about the past 90 days for all these years? Similar trend, right? Now here's the past year. And we see the change in the past year it's like, hey, we still have really healthy increases. We are at 6.5%. But remember what I said, is that sometimes if we start to look at a smaller dose, we go, oh, the rate of change has actually been a little bit less lately. That means that prices in December were only a little bit higher than they were. Okay? Do you guys know Matt Gouget? He's a loan officer, and I like one of his analogies. I'm not sure if it was his or someone else's. I don't want to pretend like it was mine. I heard it first from him. So he's talked about the market like it's speeding along and you're going 80 miles per hour on the freeway, and then now it's still been moving forward, but it's more like going forward. Okay? So I think when we talk about the market like it's tanking or that it's taking this huge turn, I think to be fair, we have to go, well, we're still seeing increases, but it certainly is slowing. So here's a couple thoughts. This is the Freddie Mac Price Index. Okay? And what do you notice about the Freddie Mac Price Index in Sacramento since 1975? What do we see happen? Do you see like this theme of cycle? And so do you see how there's been multiple cycles throughout, the past 40 plus years? Absolutely. So would we expect at some point that in this current market cycle we're in that the market would change? Right? Absolutely. I think the danger is we look at this and go, the market is going to utterly collapse. So I hear people today saying, okay, values, we're about to utterly tank like we did in 2005, or we're going to see a correction by 10%, or we're going to sort of ride off into stability. Right? And I would just say that all those three things have one thing in common, and that they're guesses. Nobody really has a crystal ball, but the market doesn't have to behave like this. But it would be reasonable as an investor or agent or homeowner, whoever you are today, to look at the market and go, yeah, things can't go up forever, and we know that. Here's a different way to look at the same thing. You can kind of see periods of increasing and then declining in blue, and then another period of increasing in white. Okay, and so we're like, okay, you've had a 7-year ride of increases, and at some point we would expect to see that ride begin to change. So let's look real quick at the bubble. Are you guys still with me? Okay, you're not going to sleep? Okay, thanks. So what happened during the bubble years? Because there's some clues here for stuff to watch in today's market. Okay, so what happened to inventory? We would say that the bubble popped right here, and then in 3 months, inventory doubled. Okay, and then in 1 year, we saw housing supply literally triple in Sacramento County, and just about the same thing in the region. So one of the clues into a market changing, we see the change first in the listings. Okay. What about sales volume? There's a clue on the screen. What was happening to the sales volume during this same period when we saw triple the amount of homes for sale? It dropped by how much? 43%. And then in the region, it dropped by 40%. So if we want to look for clues into a market changing, we would look first to the listings. What's happening in the listings? Are buyers pulling the trigger? Is there hesitancy? Are they losing confidence? All those things. And is it translating into volume? When we see a market change, we'll see it first in the listings, but then we'll see it in properties that aren't selling. And so can you see why I think our market incentives are going up, and we're thinking, that we've started to see sales volume slump. Can you see why I think there's an element of uncertainty in the market? Okay? If it doesn't change and we continue to see that slump this year, then we'll know that, okay, the market has decided to maybe change course a little bit. Okay? If everything looks normal, then we'll look back at 2018 and say, hey, that was a dull half of the year, and now we're done with that. But here's the interesting part. Prices during this same time. The average price only declined 4%, and the median price only declined 6%. So here the market was starting to implode. Okay? Inventory tripled, sales volume declined by 40%, and prices weren't that affected yet. And so sometimes in today's market, if you're only looking to price, you're like, hey, look, prices are fine. You might be missing the market because we're going to see the change in the listings and in changes in volume. Eventually in this market, it caught up to prices, in 2006 and 2007. Does that make sense? And so if you want to see the market, please don't pay attention so much to the prices, because that'll be the last thing, where the last place we'll see the trend. Okay, so the big question right now is, will buyers put their foot on the gas pedal or the brake pedal? Okay, a lot of people said, well, we're starting to see interest rates lower again. Okay, did you notice last year that the last 6 months of the year were really dull? And part of that was due to interest rates rising. It's like buyers backed off and said, whoa, time out, I'm having struggles with affordability. So if interest rates lower, then that can help theoretically push buyers into the market. But the big question is, are buyers dealing with a confidence issue also? Because if it's confidence, that's harder to address, because then some people will say, like I've talked to a lot of buyers, they'll say, I'm just going to wait and see what happens. Have you heard that sentiment? Maybe you felt it yourself. So in some senses, we'll have to watch that. But interest rates lowering right now, they're just a Band-Aid on the gaping wound of affordability problems in our market. They're a Band-Aid on the gaping wound of a housing shortage. It temporarily puts a steroid in the market, temporarily gives more attention and helps buyers get into the market. It doesn't solve the real issues in our market, which is we need more homes to be built and we need the market to be affordable, right? So that's a real issue. Some things to watch, and I promise we're going to close up here. We need time to see the trend. I know you're hoping today that we would break out my crystal ball, see what the market's going to do, but mine's broken, it has duct tape on it. But the truth is that it's like a dating relationship, though, and I'm sorry for mentioning that. It sounds totally creepy, I know. But if you start to date someone, then you don't know exactly where the relationship's going to go at first. Okay? You need time to figure out the relationship, don't you? The same thing is true with real estate data. We're looking and going, hey, look, the market is starting to slow down in momentum, and we're seeing more inventory, and we've seen some sales volume drop. How will that pan out? We need time. Okay? My sense is that we'll know a lot more about the market by March, April, May stats. We'll have a much better sense of, okay, what's 2019 doing? Usually agents say that the market wakes up around the Super Bowl, and the Super Bowl is Sunday. And so let's watch stats carefully, especially these next few weeks. If we see pendings are very normal, then we'll go, hey, great, we're alive and well in 2019. And if not, then we won't say that. Normal versus not is the big question. Watch stats. If you need some stats, I have a ton of stuff on my blog that I put out each month. There's other sources in the market. I mean, what is normal for this month and what is not? That is the big question to track, especially if you're a real estate professional. Listings, will buyers absorb new listings? That's the big question. Okay, and that's what we're going to be watching closely. Will sales volume continue to slide? Okay, that's definitely the million-dollar question. Okay, just so you know, January stats are going to be really dismal. They're going to be down 15 to 20%. Okay, but here's the thing: these properties that sold in January, when did they get into contract? December and November. So they don't tell us about the market in January. So just know, to know what the market's doing in January, we have to look at the pendings right now. Eventually, we'll see that in the March or so sales stats though. So just so you know, be prepared for some stats that are saggy again in January. Technically, they don't reflect January though. Confidence level among buyers. Let's watch what buyers are going to do. This is really huge. What's the sentiment out there? Creative financing. Let's watch lenders. Have you noticed that sometimes lenders, they're like, oh man, we're making less money. Let's create some more products to help people, afford the market. Right? Totally healthy, totally healthy. But here's my closing thought. Slowdown versus meltdown. So right now, I think what we're experiencing has been a slowdown in our market, but I'm not ready to say that the market is melting down. I think it's a different dynamic to look at 2005 when the market utterly imploded and tanked, and it was this horrible time for most people except for the investors who had money to buy. Right? We're not in that sort of meltdown mode right now. And so I would just say let's be cautious about the way that we communicate about real estate because we just have to watch and say, here's what the market's doing. So that's me. Once a week I try to post something thoughtful. There's my blog. There's my email address. If you want this presentation, send me an email and I'll get that to you hopefully sometime today. But that's my spiel, and I hope that was worth the price today. So thanks, guys.